Hey everybody, it's the Planting Seeds podcast. I'm Nick, the
And I'm
op
Josh.
the that's right. I'm the owner of the company. Josh is the client relationship manager, and today we're going to have some questions that we're going to answer. One of them, as I understand it, Josh, came from online.
Yes, it's a business platform called Alignable. It's sort of a kind of like LinkedIn, but more regionalized.
Okay, sounds interesting. So we'll get to that one. Then we have several other questions that we're going to look at, and basically we're just going to talk and have fun, is the way I understand it. So
Yeah,
let's
that's
try
the
it.
goal.
What you got? What's the first thing we're going to talk about?
All right, so the very first thing we're going to talk about today is we're going to, and this is one of those things that this is one of the things that people search on our website the most. So we thought it'd be a good opportunity for us to actually talk about it. So there's something to find and give you a resource back on the website. But so anyway, um, what is the difference between a 1099 and a W-2?
Yeah, 1099 and W-2. All right.
Yeah.
From basic standpoint, let's just get this out of the
Yes.
way.
Yeah.
Those are two different forms that have to be submitted to the IRS every year. Those go out the end of January, and it's one of the things that people stay the most confused about. You're absolutely right. Not only you said you've seen it questions on the website and things like that. I've actually been asked this question dozens of times from clients in the past, and sometimes they don't even ask, they just assume they understand it, and it's one of the things that people get wrong all the time. So at the basic level, it is the form that has to be submitted. It's basically the receipt that's turned into the IRS for services that are provided for your company.
Okay.
That's the simplest way to explain that.
Okay.
Like just a receipt that you turn in. Now, where it's different is a W-2 is for an employee, a 1099 is for a contractor, a non-employee. So it's actually there's quite a few 1099s that will get submitted for a particular taxpayer. Some of it's for interest, some of it's for like dividends, some of it's for different things. They got rid of the miscellaneous one a few years ago, or recently, last couple of years, and created one that's called the NEC for non-employee compensation. So let's talk about those two. That's where the most confusion gets in. So,
Yeah.
um, so since it's back to school time, let's talk about this from the context of school.
Okay.
All right.
Perfect.
So you picture a school. Everybody's got their mind that like you can smell fifth grade, right? All right.
Yeah.
So a teacher is a W-2 employee.
Okay.
And how we know this, and there's two ways that we're going to talk about this. We're going to look at it from what qualifies as a W-2 versus a 1099, and then what that means after that. So control is part of that, right? So if you're a teacher, the school tells you what classroom you're going to work in. They're going to tell you what time to show up on Monday, how long
Yeah.
you're going to stay. They're going to tell you what you have to teach, like either the class that you're in. If you're, elementary school, you're teaching a lot of subjects. If you're higher up in like middle school and high school, you're going to talk about a specific subject. Maybe you're the soccer coach, whatever. That's an employee. They tell you when to be there, where you're going to be when you get there, what you're going to do while you're there. So
Yeah.
if the employer controls your schedule and the work that you do, that's a W-2 employee. Now, if they hire a photographer, let's say, to come in and take pictures that year, that person has their own tools. They have their own skills. They they tell you when they can come that year because they're probably going to multiple schools. So they're going to schedule that out according to their schedule. So if that person doesn't isn't the time they come isn't determined by the employer, what they do isn't determined necessarily by the employer, and they have their own tools and do the thing that they do. You could say a plumber, but most school systems have, you know,
Yeah.
maintenance staff. So the photographer comes in, that person gets a whole check So let's switch to the money now.
Mhm.
That person's going to get a check that is a total number for the amount that was agreed upon ahead of time, or the hours that they worked times their billable rate.
Mhm.
And then that's it. That's what happens with the staff person, the W-2 employee, the teacher in this case. They're going to take taxes out of that, and they're going to pay taxes on that employee. And that's where it kind of gets kind of interesting, because you don't control your time as the employee. You're told when to work and how long you have to work, etc. But the contractor is kind of their own boss. And
Mhm.
that's fun from one perspective, because you get to make your own schedule and you get to do your own thing the way that you want to
Yeah.
do it. And if they don't, the person that you're looking at as you're looking at doing this for a school, that they don't like your system, they get the other guy.
Yeah.
That's fun, right? That's the cool part. The drawback to that is, as the employer and the worker, you have to pay both sets of the taxes, the employer side and the employee side, as a 1099, which means you're paying that what they call self-employment tax. It's really kind of the same as if you were an employee and the employer paid it, but in this case, you're the employer.
So what looks
So
like a bigger paycheck is not necessarily more money.
right.
Yeah.
So in the case of the teacher, the school system has to put aside the money for those taxes that get submitted every quarter. In the case of the 1099 contractor, see, a lot of people, I know you've heard it, I've heard it, lots of people have heard it. You'll hear the phrase 1099 employee. They are not an employee. And that's where that confusion comes.
Yeah. I mean, I think that is genuinely confusing because I like, again, that term is thrown around a lot. I think
They're
it's
the
a
ones that end up having to pay those taxes, both
mhm.
sides of it. You know, so yeah, that's it in a nutshell. That's kind of the quickest way I could say that. Not that I said it quickly, but
No, okay. So then like let's say that I started a business and I'm gonna hire my first I'm gonna hire someone to help me. If you were advising me, are you saying, hey, start out with a 1099 and sort of let them set their own schedule? Or are you saying, hey, get them started as a W-2 employee? Like as to me, as the employee, I benefit from being like a W-2. But as a 1099, but as the employer, I feel like I benefit from the 1099.
it's true. And it really depends on, what you do, and what you can afford, things like
Yeah.
that. You know, and each industry kind of has some different nuances to that. Like, you're not gonna um, just have an easy way to explain that across every industry out there.
No.
There's little nuances that happen, and there's things that, you know, you might be a doctor
Mhm.
and contract with a hospital to come in and do emergency room work for a week. That's, you know, you're going to the spot, but there's
Yeah.
some things that go and play with that. The FSLA has a lot to say about it. Typically, though, in the case of like you're the employer and you're trying to hire somebody, it really depends on what you can afford at the time. I think we talked about this last
Yeah.
podcast. Like if the employer would be going into the negative, or losing money because of the additional taxes, a great way to start is by hiring a contractor. And, um, you know, from there, grow the company up because you have a little extra capacity,
Mhm.
and then eventually bring that person on full time. As a startup, there's really no hard and fast rule. You can also just muddle through until you've got the funds to pay for
Yeah.
a full time or part time W-2 employee. It's
Mhm.
just a matter of what works for that business that you're running.
Are there any distinctions with with a 1099 for like how many hours they can work, have to work? Is basically just sort of, it's just a fee. You're saying, hey, I'm going to pay you this amount of money. I want this job done.
Sort of.
Yeah.
Depending on the type of contractor that you're looking at, if you, let's say you ran a pressure washing business,
Yeah.
and you want to hire your nephew to come in and help you out with it, you say, hey, I'll pay you X amount of dollars per week, and you will do this, this, and this with me, blah, blah, blah. And as we grow the company, I'll bring you on as an employee and pay the taxes then. But if you were someone looking for a graphic designer, you're not going to call that graphic designer and say, hey, these are the 16 things that I need, and I'll pay you this much, and I need you to have it, have it done by this deadline. However, you get it done by that. The graphic designer in that case will be the one determining what the fee is.
Yeah.
So it's a little different, but it's kind of the same in the sense of the taxes. You're not paying the taxes on
Yeah.
that. They're not an employee. So
All right. Let's say that I'm a 1099 employee and I'm
you're
trying
not
to
a
figure this out.
1099 employee.
No, oh, you're right. You're right. Sorry.
You're
It's
a 1099
hard.
contractor.
I'm a 1099 contractor. What do I need to know about my taxes? What's the smartest thing to do about that?
You're responsible for all of it. Whenever you file your tax return, you're gonna, the IRS will get a report. That 1099 goes to you and the IRS, so they know what
Mhm.
you're paid by any given business or individual that contracted your services. So you're going to have that's already reported to the IRS. You're going to have to put that on your tax return. You're going to have to report that income, and you're going to have to pay the taxes on it. So it's both sides, whatever that looks like for you and your business will determine the dollar amount that you have to pay the IRS. And it's always a great idea to pay in quarterly. So you're going to want to reserve some of that money to be able to pay those taxes at the end of the year.
Yeah, I'm asking the question like I didn't already know the answer to that because I have been bitten by that before. So,
Absolutely.
I was like, I live that, but no, I do think I think that's a super important distinction to make because there are a lot of jobs out there now that are 1099. And I don't think people go in prepared realizing that when it comes tax time, like they've got to give some of that back. It's rude.
Yeah. Yeah. And, one way to look at it is like a lot of people just think of it as their money from start to finish. But the IRS also looks at a portion of that and says that's our money. And
Yeah.
they are bigger than you.
Yeah, and they're going to get their money.
They are.
All right. Is there
At
anything
some
else in
point.
terms? Yeah, I was going to say at some point, one way or the other. Is there anything else in terms of like 1099 and W-2 that you think is like important for either a business to know or like the contractor or employee for a W-2 that's like, something to think about or like, I feel like you did a pretty good job explaining it, but I didn't know if there was something something that you wanted to touch on.
Probably not.
Okay.
You could talk about these subjects for hours and hours and still never
Yeah.
really get to the bottom of a lot of that. There's, every entity out there has things that they do that's different than every other one. So
Yeah.
it's, really it's individual kind of thing. And if you have questions, it's always a great idea to talk to somebody.
Yeah, for sure. No, yeah, lesson learned on that one. No, I think like because there's a lot of nuances with with everything like that. And there's a lot of like variables that affect all of it. And so it's like there's plenty of things that I could ask about with both of those things. And it's like, but the situations can be so vastly different that sometimes it's just easiest to call and be like, hey, I need help.
That's the truth.
Yeah.
It's this way.
All right. Speaking of situations that have a lot of variables and can have wildly different results, if you're cool, I'm going to jump to our submitted question from a friend. So,
Yep.
okay. So this is from Joe S. He said he had some colorful language at the beginning of it, but I cut that out. So, where should the responsibility line be between the business owner, bookkeeper, accountant, and payroll provider? When something goes wrong with payroll, it sometimes feels like everyone points at somebody else. Who should actually own that before payday?
Okay. I feel like it's a loaded question, but we'll attack it.
To be quite honest, Joe also works for a payroll company, so I feel like he is coming at this from personal experience, and he's curious as to how we handle that.
So I think that responsibility ultimately lies with the business owner to make sure that everything is in place. Now, mistakes happen, and there are things that are outside of people's control. Um, you know, and it depends on the accountant that you're dealing with. I'm gonna kind of lump the bookkeeper and accountant into this.
Yeah.
Some bookkeepers are just bookkeepers. They don't do anything else. Some do payrolls, sales tax, etc.
Yeah.
And then others are more full-fledged accounting companies like ours. So let's just put those into one
Yeah.
basket. So you have the owner, the accountant, and payroll system. And so you're paying a subscription to the payroll system. Um, so I don't really work with a lot of payroll systems that run the payroll for you.
Yeah.
There's people out there like that, and that's, they're called PEOs. Like, nothing against them. I just haven't worked with any
Yeah.
personally. The clients that we've had that have had payroll, we have some systems in place that we can help provide payroll for those clients. So ultimately, it's the employer, and that's the business owner.
Yeah.
If there's individual mistakes that happen because of whatever reason, people are humans.
They are. Yeah.
Then the person that made the mistake, or the person that they work for, is probably responsible for the mistake. But if it's not a mistake that happened, it's just, let's say, like the employer didn't have the money in the bank account to run payroll, and then approved payroll, and the accountant said, "Hey, you don't have the money in the bank to run payroll." That's the responsibility of
Yeah.
the owner of the business, the employer. Certainly, there's things that happen that are being paid for, like the run itself. So
Yeah.
payroll for us is more of an administrative task, just to make that clear. We don't do any human resources service. We don't service anything like that. Nothing legal.
Yeah.
If you ask us as a service to oversee your payroll, at the end of the day, all of our verbiage in our contracts and our engagement letters say that the owner of the business, the employer, is responsible for the payroll itself. It's their responsibility to pay the 941 payments every quarter, to make sure the
Yeah.
W-2s go out. And the IRS looks at it like that as well. It's not the person that is servicing that account. It's not the accountant or the PEO or the payroll provider that is responsible for those things to the IRS. It is the employer. If the money's not there and you say run the payroll, you're going to run into multiple problems because, one, the checks aren't going into the account. You're probably going to ruin the relationship with the payroll system, like whether that's QuickBooks or Gusto or whoever. They're gonna get mad because you bounced a big old payroll.
Yeah.
And they want to get reimbursed for the fees that they have to now pay.
You're also going to have bank fees more than likely,
And there's bank fees, and the
Sure
banks
are.
pretty good at getting their money too. So the IRS, though, looks at it like it's the employer's responsibility, and if they outsource that service to someone else, there are definitely things that could come up that could be the fault of, let's say, Gusto, or the fault of UBO payroll.
Yeah.
There's also things that could be, like the accountant just spaced it,
Yeah.
which means that they're not very organized, don't have system in place for that kind of thing.
Yeah.
A simple checklist, reminders, a workflow in your practice management system
Yeah.
helps prevent a lot of stuff. So yeah, there are scenarios where other individuals could be involved or responsible for things that happen. But if I run your payroll and you write a $6,000, $8,000, $15,000 check that you did not make me aware of, and then the money was in the bank, and then that check comes out before the payroll, and then the next day the payroll comes out pretty
Yeah.
early. Most of them hit the bank before people are on their feet,
Mm-hmm.
and that's on the employer. That's the shareholder. That's the problem was not that the money wasn't there, and that's the other thing too. Another rub you could look at is a lot of times people don't tell their accountant when they're writing a big check like that for whatever reason.
Yeah.
Most of the time we find out after the fact and then are asking for clarification on what that big check was for.
Yeah, that's sort of my thought. And like, what I told him, like, sort of, I just given a quick reply, here's the thing. If it's in the scope of what we do with our work, we're going to do our best to help you get that cleaned up. But like, at the end of the day, we're kind of cleaning up your mess, not our own. We're kind of helping you fix the mess that you created. I like, aside from software issues or, and here, like, there have been things before during the hurricane when power was out and banks were closed, especially if you use like a regional credit union, there were things that did happen, and I ended up running paper checks and stuff like that. And those are those exceptions. But again, you don't run your business to the exception. You tackle those as they come,
Right. Absolutely.
Yeah. Yeah. So, I mean, here's the thing. Like, I think on that question, Joe, and you probably agree with me on this, or agree with us on this. At the end of the day, I think the responsibility falls on the business owner or the company.
Yeah. I mean, for sure.
All right. All right. Now we're going to jump over to some of those rapid fire questions. We have like 10 minutes. We're doing good. I'm trying to actually keep it at a half hour this time. All right. So we're asking a couple of them. I'm going to jump into one, and okay. I'll do that one next. Okay, here's one. All right. You find $10,000 unexpectedly in your business account. What's your first move?
I find $10,000 unexpectedly in my business account. I'm gonna track down where it came from. I
Yeah.
want to know, like, one, I'm an accountant by profession. I don't know if you know this.
I did, yeah.
Okay. So if something hits my bank account that I did not know about, I'm like, I'm not doing my job right. You know what I mean?
Yeah.
So, and unlike a lot of accounting firms, I don't know if you've ever heard the what are those, like, the little saying, like
Yeah.
the cobbler's kids have no shoes, or the
Yeah.
contractor's house is in disrepair, stuff like that. I
Yeah.
look at it completely different. Very first thing I do every day when I come into work is go through and do like any accounting that needs to be done on my end. It
Yeah.
makes it where, to me, it makes it where the work is done, and I know that the business side is taken care of, and I can focus on working with the client, stuff that I need to be doing at the time.
Yeah.
Just takes that off my plate and it's done. So that's the first thing I do every morning, honestly. So yeah, if I came in and there was 10,000, I want to know where that came from.
I mean, my
And
first thought
what
was like,
did
I'm
I
calling the
miss?
bank,
Yeah, absolutely.
Yeah.
I mean, I could look in the bank and see what the memo line said, and then start asking questions,
Yeah.
and then call the bank and say, hey, you deposited this in the wrong bank account. It's not mine.
Yeah. To be fair, I have been in the situation twice where the bank has put one of those lovely local credit unions has put almost the same exact amount of money into our account incorrectly twice. And it's like, I could have really easily spent that, could have used it. But I was like, nope. To be fair, I will say,
Sure.
actually, I'm pretty sure that the first time you guys caught it because you used to be our accountants for the business I used to work for. So the second time I was ready for it. But yeah. Next question. All right. Okay. What is an old school business practice that still works?
Old school business practice still works.
Mm-hmm.
Man, context.
Yeah.
Any context, like pick
Any
a
context.
lane.
Yeah. No.
I'm asking you to pick the like,
No. Hmm. I don't know. I thought of it sort of a general business thing, but I like as far as like how businesses operate. But for the sake of this context, let's say what's an accounting practice that's old school that still works?
An accounting practice that's old school still works. I really would have to say that very, very few things have not been touched by technology recently
Hmm.
within the last couple of years, for sure. I mean, the basics are the basics. The double entry accounting has been done for hundreds of years,
Yeah.
going back, you know, to the old days, you know. Um, so like that's still something that it's necessary
Hmm.
because like there's checks and balances, right? So
Yeah.
I would say that's probably one right there.
Yeah.
Just the fact that people still do double entry counting. So to to clear that up because I know that
Yeah.
was something that's probably just understandable from the accounting side of things. The double entry
It's
accounting is when there's an entry at one point in the books, it also has to tie out to another spot in the books. So if you have um, sales,
mhm.
it it gets booked as sales, so that money goes into your bank account, and so it gets booked into the bank account as well. And those numbers should match.
Okay.
So that's you're being able to tie out income or expenses or assets or liability. It ties out to something else in your books and keeps that stuff balanced. So at the end of the day, everything comes out to zero,
Yeah.
and that's what you're looking for. It's a lot more complicated. Not it's less. It's just as complicated as doing your checkbook. If you remember what a checkbook was, making sure that was
Yeah.
balanced at the end of the month and match the bank statement.
Hmm.
You're doing that though in two spots. So every income has something that it ties out to. Every expense has something that it ties out to. So let's just use that as an example. You make $500, you spend $400. The $500 is it's booked in both the bank account and the revenue account. You spent that money, it goes against what was put into the bank account. So
Hmm.
it all ties out and comes out as a balanced set of books.
That's the goal. Yeah.
That's right. If it doesn't, something's wrong.
I would like, I think that's I mean, it's a broad overview, but I think that does help explain some things. And it's also like, it is neat to kind of know that that's relatively unchanged. I mean, I guess math doesn't really change a ton. So that's like,
Yeah, well, it's just a system that makes it where it's easy to find when something's wrong. It's
yeah,
not necessarily easy to find when something that thing that is wrong, but
yeah,
that something is wrong. It'll make it a lot easier to find.
yeah.
And
It's
like
easier to
even
recognize when there's a problem.
yeah, and
Yeah.
even the stuff that's coming out that's more AI based accounting ledgers are using double entry because it's just a system that isn't
Yeah.
isn't in any need of update really. It's pretty well thought out and it's been practiced for years and years and centuries.
Yeah. So the system that's being used, like the system hasn't changed, but how it's used sometimes is like, or who's using it rather could, yeah, that's changed a little bit.
What was the original question?
Oh, it was like, what's an old school business practice that still works? You were there. I mean, that's
I mean, for accounting for sure, I still think honestly, I think reaching out to people in person and trying to sit down across from is kind of an old school practice that still works. And I think it's becoming just a, you know, I'm going for a double instead of a single.
yeah.
Um, trying to stretch it out. I
No, you're
think
good.
that just that interpersonal side of really, it's something that would be considered old school. Other,
Yeah.
not to say that there's not other things, but those two kind of stand out to me. For the accounting
They do.
side, it's definitely double entry, but for everything else, I think actually being a human that interacts with other humans is kind of a big deal.
I also like, and this is one that's like, I'm it's a little bit controversial because I will say firsthand, I have argued against this sometimes for some people because it's not right for everyone. But especially in a rural community and like the kind of communities that we work and live in, I think still supporting like a business that still supports like local community events, like sponsoring the little league team or throwing your banner up on the side of a school fence, like those kind of sponsorships, I think are still effective. Um, you're going to see the same businesses a lot of times over and over on the exact same thing because they're always going to get hit up. But I do still think there is something about that practice of showing like, hey, I am a part and I support this community. And I think sometimes we undervalue that.
Yeah, I agree. I also would say that you are seeing less and less of that as things become more nationalized and even globalized. Um,
Yeah.
Firms like ours are being bought up, not ours, but a lot of firms that are more regional or local firms get snatched up by bigger entities out of big cities or New York, Chicago, LA, and
Yeah.
um, and then they do things like they do in New York, Chicago, and LA, and kind of bypass the culture
Yeah.
that of the town that they're in or the region that they're in. And that's one thing. Like, if you want to look at it from the negative side of the question that you asked,
Yeah.
what's something that doesn't get done like that it should be? That's it, man. Like understanding
Yeah.
your context in a specific space and being able to work within that. I think
Yeah.
is something that we are definitely losing.
It is.
Um, you know, whether you're in the rural South or the Midwest or whatever, each of those places has its own thing. You know, business
Yeah.
owners, while business is business for the most part, business owners in those places function like people from those places.
Yeah. They do
And
because they
so
are.
if
Yeah.
if you're trying to apply rules to someone that you're not in that context, it's going to be hard for them to understand that and adapt. And certainly, I've said this plenty of times. You should run your business as if it was rated on the stock market. You know,
Yeah.
like you should run it like an actual professional
Yeah.
thing from day one. One, I think that's an important mindset for business owners because they will treat it a little differently than if it's just like we talked about last week, kind of a hobby,
Yeah.
that they make some money at, and oh, this is just my money, and I'll do whatever I want with it. If you're treating it like it's very own thing and it's important and it's, you know, treat it like a Fortune 500 company, you'll eventually run it like a Fortune 500 company.
Yeah.
That doesn't mean you'll ever be a Fortune 500 company, but most of those businesses started out small too. I mean,
Yeah.
Sam Walton started off in a little grocery store and then lost that,
Yeah.
lost everything he owned, went somewhere else, ended up in a little grocery store and built that into Walmart. You know,
Yeah.
it's just a matter of learning from what happens, but also understanding who you're dealing with. And I think until recently, Walmart kind of did that, right? Like
Oh,
Walmart
yeah.
thought of themselves in our childhood.
Yes.
Walmart was you know a blue collar store, and then some things changed, and they sold to a more globally focused
Yeah.
owner, and now they act like a globally focused business.
That is the
So,
that is the nicest way you could have put that. That will get us in as little trouble as possible.
I mean, I don't mind getting in trouble, but I'm just
No.
just
Yeah.
saying how it is. You
No,
know,
you're right. All
you
right.
know your
We got time.
audience. That's an
I
important. That's
that I mean,
important,
I was going to say
no
we
matter
do
what
talk
industry
about that.
you're in.
We do talk about that a lot. It's like, I mean, we like I say a lot, we've got to meet people where they're at. And it's rather than trying like it's not saying it's like you've got to change yourself for who they are, but you've got to change your approach sometimes. You've got to be there's got to be some kind of business compassion and understanding of where you are and who you're talking to. And I like and maybe that's what's missing is compassion, and maybe that's it. You know.
Okay.
All right.
But that's
What?
not an old school business concept.
No, that's a
Unfortunately,
human concept, but
it is.
well, that was not the question. No. All right. When is debt actually useful for a business?
Okay. Um, so
Or is it? Yeah.
did you have a specific context in mind that you want to talk about direction with this, or you want to just spitball it?
I'd rather you just spitball. I really did. It's more one of those things. It's like, you know how you hear it's sort of based on those things that you hear. It's like, oh, that's good debt. Is it?
Okay.
You know?
Uh, so okay, I'm not. We're just going to name some names in this podcast. I'm not the guy that says you should not be in debt or that you should
Yeah.
not, use credit. Credit, by and large, is how the
Mhm.
world goes around at this point.
Yeah.
I'm also not the guy that says you should be leveraged to your gills and have hundreds and thousands of properties that take loans out against. But I'm not
Yeah.
saying their names. I think we know who we're talking about here. Not that either one of them are necessarily wrong.
Yeah.
Some people should not have debt
Yeah.
because if they can't control it and they can't manage the stress that goes along with it, it's going to ruin them.
Hmm.
Some people can handle that and manage it well. And there you go. There's that.
Okay. Yeah.
I don't like debt. I do use a little bit of debt and credit.
Mhm.
Let's say credit.
Yeah.
I don't like having a debit card in my wallet.
Hmm.
I would prefer to have a credit card in my wallet. And as much as possible, I pay that credit card off every couple of weeks, or at least by the end of the month, I pay
Yeah.
whatever I put on off. For me, it's a security thing. It's a step of separation between my actual bank account and what the rest of the world has access to. If I'm using a
Yeah.
credit card and somebody gets that, it's much easier for me to like say that was a fraudulent expense or whatever, and it doesn't come out of my actual bank account.
Yeah.
And
Yeah.
my wife and I had that situation happen several years ago, not exactly 2014, 2015,
Yeah.
where and that's back when we were not making a ton of money or much money at all. We were, you know, restarting after we were still kind of getting our feet under us after the collapse in 2008 and a few other things. And
Yeah.
so, like, excuse me, the person that got our card, I'm not even sure how, charged like $1,000 on Amazon,
Hmm.
and that was basically what was in my bank account at the time. So that put us in a pinch, and we were able to get that back. But immediately after that, I went to the bank and got a credit card so I could put my bills on and pay it off every 2 weeks,
Yeah.
and never had that happen since. To me, it's just like I said, it's a step of separation between my actual money and what people can get access to.
Yeah.
And I haven't used a debit card from the bank since then. They send them to us. I don't even activate it. Just shred them.
It's just garbage at that point. Yeah.
Just garbage. Um, and then I use that credit card and I pay it off whenever
Yeah.
we can. So like your business can be very similar to that,
Yeah.
but starting off with a business is kind of hard. A lot of places won't give you, if you're starting it brand new, a lot of places won't give you any kind of credit until you kind of build
Hmm.
something up. They're still going to ask for personal uh, security in that, which means that you have to have good credit. And if you're not using any at all, then you're not going to have enough to get help with your business. Whether that's credit card, an SBA loan, they're going to want to see, a good track record.
Yeah.
So to me, I think that there is some debt that's good. Yes, the kind that builds your credit. And if you're
Yeah.
managing that system well, you know, um, that builds it to the point where you can get more. So then when you're ready to buy an asset for your business, whether that's a property, that you're going to put the business in, or a piece of equipment that your business needs to go to the next level, it'll be much easier to secure that.
Yeah.
But I think it should be managed well,
Yeah.
and not necessarily be the first choice every time to just go put something on a card, or go get a loan to pay for something that you should have just kind of paid for. And then I think we talked about this last week as well. It really depends on where you're at with cash.
Yeah.
To use that illustration, if you've got $300,000 sitting in the bank and the piece of equipment is $300,000, I would say finance it. But if you just need a computer, the most expensive computer I've seen recently was like $3,000.
Yeah.
In the cash, and have a very, fancy computer.
Yeah.
You're worth it.
Yeah.
You know what I mean?
You earned that. Yeah.
You earned it. You got $300,000 sitting in a bank.
Goodbye,
You
computer.
deserve
Yeah.
that computer.
Yeah. So really for you, like, if you're going to have debt, the best debt is managed debt.
And or I guess the better way of saying that is manageable debt.
Yeah.
Something that, if you need to, you could pay off quickly.
Mm-hmm.
Yeah. But just to rack it up, that's it. It's irresponsible. And you should be as responsible as possible, because again, like I said, you should be running your company as if it's a Fortune 500 company, and that you have people that rely on you. And if you have employees, you do. If you have a family, you do.
You do. Yeah.
You know what I mean? So if you're just making random decisions without any sort of support or evidence that it's viable or worth it, then that's not great. And if you're just spending money because it's there, that's not great either. You should, take some time and make some good decisions on that stuff. And part of that is understanding what you can afford, what you can't afford, what you do actually need versus what you want. And when you do actually need something, but you can't quite afford it.
Yeah.
But if you got that thing, it would make it easier to afford it.
Yeah.
Say some piece of equipment, right? It gets the job done faster, gives you more capacity for more work to do.
Yeah.
And then pay it off as quickly as you can.
Awesome. All right. One last question, and I'm going to ask you this one, but I need you to answer it not as the Nick who just purchased Harvest.
Okay.
Okay. If you were to start a business tomorrow, what would it be?
I really do like accounting firms.
Yeah.
Like I would probably do that.
Yeah.
Yeah. Hold on. Let me see. What else would I do? All right. This is gonna. And then I would start an accounting firm with the money that I got.
With that money. Smart.
I told you you're cutting it. You're cutting it.
I'm going to leave it right in there. Yeah. No, it's funny. Like my weird idea would also be book related. I can't take complete credit for it. I saw someone doing this the other day online, and I was like, oh, that's a really it's a very niche business idea, but it is what it is. But it fits into my skill set. So what they are doing is they took all of their they had just gotten married, and they took all of the gift cards, or not the gift cards, but like the cards they had received, and they scanned them in and made a book out of those. That way you can throw away the cards, but don't have to feel guilty about like, oh, now I've got like Nana's signature forever. I've got those well wishes forever. And what they did was they basically scanned those in and made a book out of it. And I'm like, oh, there's something there.
That's pretty dang good. Mine would never actually work, but that's a pretty good idea.
Thank you. I was like, not bad, right?
Yeah. Yeah.
Like first birthdays, you all the people that sent your kid their first birthday card, you've got like little messages in there and notes. You got yourself a little book on the shelf. Yeah.
Yeah. And I'm sure you could like embed photographs and stuff too, like whatever you want. That's
I mean, you could.
Not terrible.
No, I'd again, it's real niche, and I don't know, like how much money would there be to actually be made with that? But I'm like, smart idea though.
It's not bad. I mean, everybody I know eventually got married, and some of them 2 or 3 times
Yeah. That's 3 books right there from the same customer.
from the same customer.
No, but
So
like
like
with,
that's
you got weddings, you got baby showers, you got like all those kind of things that people do cards for. And it's like, what do you do with those cards? Now, if you're me, I literally have a wooden box over here that I have like every card I've ever received because that's one of those weird things where I place personal attachment to physical objects and I struggle with it. But for most normal people, they might be okay with scanning it and having a book.
hey, that's normal to your brand of ism.
It is. It fits there. Um,
My
but no,
brand also likes to collect things,
yeah,
and that's I think why accounting works so good because I can like organize stuff for me.
yeah,
For me, I can organize stuff and like make things systematized and streamlined, and most of it's on in the cloud. So like I don't have stuff piling up at my house.
yeah. You don't
So
have a wooden box full of ledgers.
yeah. I don't.
No.
That would be weird.
Yeah.
Although that's going back to your question from before about old school practices. That's how they used to do everything. They literally
Yeah.
had boxes and boxes of ledgers for all these years, and nobody ever got rid of them. And they just
No.
sat there and collected dust. And every once in a while, the big CPA would walk in and feel happy that there was all of that stuff. I guess I'm
Yeah.
assuming that most accountants are on the spectrum somewhere.
Probably.
So the big CPA was probably like, yes, we have these things. I can go look at them anytime I want, but I don't want.
All right. We're back at 40 minutes again. It's fine. But that may just be our
Our
sweet spot.
podcast, we can do whatever we want.
I know, and you own the company. You can tell me how long I want to talk on it, But no, is there anything else that we wanted to I went through my rapid fire questions. Is there anything else that we wanted to add today? Or are we feel pretty good about our discussion of payroll, 1099,
I
W-2?
I am
And
gonna add something. I've got something for you.
okay.
Are you ready for this?
Yes.
All right, from the blue, you've not heard this question.
No.
You have no idea what's coming.
No, I don't have
This this is gonna be
yeah.
fun.
Oh, good.
When should a business owner start to consider marketing?
Oh, before you ever open the business.
Okay.
Marketing needs to be in your budget from the get-go. If you're not considering marketing as a part of your business plan, your business is already set for failure. And
Wow,
I stand
you
by
did
that.
so much. You did so much better than me on the random like not heard the question list.
I have some strong thoughts about that. No,
I overthink things evidently.
no, but I mean, truthfully, I mean, I could elaborate that for probably another 40 minutes, truthfully. But if you are not considering how you're going to market your business or how you're going to get it out there, I don't care what it is. I don't care if you are 3D printing swords to Lord of the Rings fans and that's your plan to sell it online. You need to know how you're going to attract those fans because it's not the local newspaper. Like, and the thing is, if you're opening up a local business where it's a farm stand and you have to get people to come to your business to physically buy something, you advertising online is a waste of your money.
Yeah, that's something like you and I have known each other for years, and a lot of
Yeah.
times, a lot of our conversations veer that direction
Hmm.
towards marketing. But I always go back to what my intro to marketing professor said, basically day one.
Yeah.
That whenever you hear the term marketing, you think advertising, but that's not everything that marketing is.
Oh, it's
It's
not.
it's everything from the inception of an idea to the delivery of that idea to the final user, whether
Yeah.
that's the packaging, the branding, the logo for the business, the way that you present yourself in the way that you write things. Like it's such an all-encompassing concept
It
that,
is.
and it's no wonder that most people kind of get to the, oh, I'm gonna focus on advertising because that cuts it to like,
It makes it
they don't have to,
manageable. Yeah.
yeah, they don't have to worry about all that other stuff. That stuff's delivered to them, and then they go, okay, here's the ad, the
Yeah.
advertising for that. So yeah, like No, good job. You answered it
Thank you. Yeah.
way better than I answered
No.
that weird out of the blue
Sometimes I can
questions.
be really good on the fly. Not all the time. Sometimes I'm awkward and whatever, but I got there this time.
Yeah. Cool.
But all right. Well, I will this one should be going up on Thursday. Whatever Thursday is, but we're going to try and get these up every single Thursday. So look for this one coming up Thursday or watch it Friday morning. But we have had a great time. Again, I am Josh.
I'm Nick.
And you guys have a great day, and we'll talk to you next week.